Hello, this is Pal Walker at MissionWinners.com, and I'm doing a training coaching video for everybody. It's my background. I was have been an IBD meetup code-up leader for about 10 years. Used to coach, periodically teach outdoor survival skills at higher elevation. Coached baseball for years and loved it. Saw some players do fairly well through the years. I want to share this with you. We are coming into the sweet spot of the year. We are coming into the fourth quarter. We are coming into the time when your year can be made if you're prepared. I'm going to share a quote with you that I love from Thomas Jefferson. Right there. The right mental attitude from achieving his goal. Nothing can stop you. Nothing on earth can help you if you got the wrong mental attitude. For us, our big winners are always in front of us, and we run it like a business. We look for the right spots to enter. We always limit losses, and we don't impose our will on the markets. Now, we want to try to find winning stocks. How do you do it? Well, here's one spot you got to start with. You got to know what winning stocks have in common. I'm going to draw this over onto the screen. Many of you have seen this before, and I'm not trying to bring it up to irritate you. That's not my goal, but just take a look at it. 87% of the super stocks. By the way, this information is from Daily Graphs back in the 90s, and the history repeats itself. Certain things don't change. Chart patterns don't change. Companies with great fundamentals are leaders. That's a fact. It's not an opinion. It's a fact. 87% of the stock had earnings of 30% or higher before they made their moves. 70% of them had earnings of 50% or higher. Basically, what am I saying? About 80% of these stocks had earnings of 40% or higher before their move. 86% of them had sales up 30% or higher. 63% of them had sales up 50% or higher. What am I saying? 70% of these 40 great winners had sales up 70% or higher before they made their move. Think about that, folks. That's huge. 40% or higher in sales, 40% or higher minimum in earnings. Focus on that. 2/3 of them came from leading groups. This is research straight from Bill O'Neill's company. I'm going to take it a step further and show you this. I think this is important. I'll let you read this. I'm not going to read to you because that's an insult. But the last paragraph says it all, folks. 50% of a stock's movement is related to the industry and its sector it's in. So what do we do with this information? We know that low-price stocks are low-price stocks for a reason. We know that companies that are in lagging groups, the odds of them working are not that high. We know that companies that don't have any good earnings or sales, they don't need both, but companies that don't have any earnings or sales underperform. We want to find winners. So I'm going to show you how to make a screen. We're going to do it right now, folks. Watch this. New stock screen. And guess what we'll call it? Finding. If I could type, my life would be easier, right? Finding winners. And we're going to make a screen. Now, we know for a fact companies have to have a decent relative strength rank. I'm not going to put an earnings per share rank on here, okay? But I'll put a relative strength in there of 80 or higher. It's a fact. Companies that have a relative strength that's higher outperform those that don't. So it goes from 7,600 stocks down to 1,539 stocks. You see that? 1,539. We just eliminated a ton of stocks. We know that we want to find companies that are being bought, not sold. An accumulation distribution of A or B. Here they are. Waiting for it to load. Here we go. So now we've dropped from 7,603 stocks. We're down to 1,178. We also know unequivocally that companies that have earnings up 40% or higher outperform other companies. So on this slot, we'll put that in there. Last quarter's earnings up 40% or higher. And that takes us from 7,603 all the way down to 475. Three constraints. We're going to take it a step further. We know for a fact that companies in leading groups, you saw them in research, companies in leading groups outperform. So we're going to look for stocks in the top 40 groups. That's it. By the way, this isn't my idea. This is an idea from Bill O'Neill. This is ideas from Mark Minervini. These are facts. We're down to 160 stocks. Just like that. By the way, our goal isn't to say, I don't want to look at too many stocks. No, our goal is to say, by gum, I want to fish in a hole where I know the fish are. There's you and me. One person's fishing in one hole and another person's fishing in another fishing hole. And for every fish that the first person catches, the person in the second fishing hole catches 3. Which fishing hole are you going to go to? You're going to go where the fish are. This helps us go where the fish are. That's what we do. Now, we also know that you don't buy low-price stocks. They don't work. They're not leaders. We want to buy stocks that are higher priced. So you know what I'm going to cut it off at? I'll give you some latitude. I'll cut it off at $12. $12. So what's it take us down to? 129 stocks. Also, price worth it versus the 52-week high. We know that stocks that are within 15% of 52-week highs, I'll give you 20%. Stocks that are within 20% of 52-week highs have a greater odds of hitting highs. Think about this. If you said to me, Pat, I want to buy stocks that can hit new highs, you know what I would say to you? You know what's really going to increase your odds? Look at stocks that are within like 20% of 52-week highs. Use common sense, folks. That's what it goes. That's simple. Now let's take it a step further. Volume. We know that you've got to have stocks that trade some volume. You don't need a ton of volume, but you do need volume. And there's a reason why. Stocks that trade really thin, institutions won't buy them, and institutions move stocks. Stocks that trade really thin are suspect to quick downdrafts. 50-day volume? Oh, by the way, price versus moving averages, we focus on stocks that are over the 50-day moving average. I'm going to put that on there. So let's 1% over a 50-day moving average. We're down to 120 stocks. Now we go down to volume. Volume, 50-day average volume, we're going to cut it off at 120,000 shares a day. That's it. 120,000 shares a day. That's still pretty dang thin, okay? What's it put it down to, folks? We've got 99 stocks. We started with 7,600. We're down to 99. Go through it. Relative strength, accumulation, distribution means it's being bought. Last quarter's earnings up 40% or higher. It's in the top 40 groups. It's over $12 a share. And again, you can say, why are you doing this? Man, to get ready. To get ready. Hey, it's like sitting there saying, the sun's coming out and I want to work on a tan. By Jove, I better get ready and get the sunscreen ready to roll. Here we go. Percent off high. 20% off 52-week highs. You want to buy leaders. It's over the 50-day. And it does 120,000 shares a day. I'm showing you how to build a screen. By the way, I will tell you this. This is MarketSmith. Daily Graphs Online was the original online product. I was in the beta test group in the development of that, so I know a little bit about it. Also, I will tell you this. I've sat down and had lunch with Bill O'Neill twice. So I love doing this. I love it. People say, man, you need to get a life. Okay, maybe I do, but I do have fun. So let's do something. We're going to raise this up. Now you can say, Patrick, how should we sort it? It's simple. Sort it by industry group rank first. So you're looking at the number one groups. We know for a fact leading groups and leading stocks in those groups do better. So we hit it here and we rank them. Now, we want to look for the best stocks. What's the best stock? Oh, the stock closest to new highs, right? So here's the next way we sort it. Percent off high, right here. And click it twice so we get the leaders. Right there. And lock it. So now what do we have? We made a screen getting ready for what's coming. Folks, why am I doing this? Hey, I'm telling you what, you make your year coming up here. You can make your year. Now, am I saying it's going to happen? No, I'm not saying that. That's forecasting. But we have historical precedents. It's analogous to me saying, you live in Alaska and it's December, and I'm a forecaster. I say, the odds are fairly high we're going to be getting snow the next week. Duh! Here we are. Leading groups, leading stocks. And here they are. Here's the names. You can just look at them if you want. I can scroll through, but I don't want to run too long on this tape. Folks, or video. Tape, I'm dating myself. Gee whiz, tape, what's that? Scotch tape, right? No, on this video. But here's the leading ones. So again, what's the foundations? We are trying to get ready for what's coming. It's what we teach. It's what we coach. Every night we make a key list and a key list video. Every day we come in there in missionwinners.com and we give buy and sell alerts real time, and we give heads up. We also answer questions with videos all the time during the day. People have questions, we answer them. My goal is this. It's to educate you and coach you. It's not just give stock tips. What I just did here, folks, I'll tell you, back when I started this, there was no internet. I had to find all this out myself. And it took a lot of hours, days, and years to keep hammering it through. This is for you. It's a way to find winning stocks. And you can say, oh God, I might miss something, Pat. There might be something I miss. Okay, fine. You're not going to catch them all. But if I can document that most winning stocks, the vast majority of winning stocks, have these traits that I just shared with you, by Jove, you just stack the deck in your favor. And you know what you're doing? You're fishing in a good hole. And that's good. So now we're ready for the fourth quarter. I'd like to be able to work for you with this, and I just wanted to share it with you. This is how we do it. And it works. It works. So thank you very much. I hope everybody's doing well out there. Be safe, be healthy, take care of yourselves. And the reason why is right now, as you're listening to this and you're watching this with your eyes, remember this. Everything you're using has to last a lifetime. Yours. And I hope it's a long one. So let's enjoy the ride and do what we can. And I thank you.